Hello everyone, I'm Terry Ryder, founder of Hotspotting, and welcome to today's webinar in which I'm speaking to leading buyers agent Kate Hills on the intriguing and perhaps controversial topic, while Melbourne makes more sense than Perth right now for investors. Now that topic is contentious because it runs counter to the media portrayal of the markets in those two major cities and also to the behaviour of many property investors, many of whom are piling into the Perth market frenzy because of media reports of an ongoing boom, and perhaps showing less interest in Melbourne and Victoria because of perception that there's no growth on offer there. But today we'll be arguing that Melbourne does indeed make sense if you understand about market dynamics and cycles and the issues of when you should get into specific markets and when you should stay away. So to explore this topic, my special guest today is Kate Hill of the national buyers agency Advisable, who has considerable experience and knowledge of both markets and indeed of markets right across Australia. So Kate Hill of Advisable, welcome.
Oh, thrilled to be with you and everyone out there, Terry.
Yeah, so it's a great topic. I mean, I've been really pleasantly surprised at the engagement from our audience. This topic, we actually got more numbers for the webinar today than we have at any time in the past 12 months for a webinar. So maybe it's the attraction of you as one of our regular presenters.
I don't think I can take credit for that. I think it's more the fact that everyone must be so frustrated with actually trying to buy a property in Perth right now. And they're looking for alternatives. That's what I'm putting my money on anyway.
Well, that's right. But I mean, the topic really does speak to the wisdom of how you go about property investment and when you get into markets, because I can recall that 3 years ago when we started including Perth locations in some of our national hotspots reports, people were saying, well, why would you recommend this? I've had no growth for 10 years. Yeah. No one wants to buy there. But now, of course, everyone wants to buy there after it's had 3 years of growth.
Yeah.
So
yes. Yeah. Well, I think now, yeah, exactly. So now we're going to be making the case for Victoria being exactly that location Perth was, let's say, 2 or 3 years ago. Yeah. Without peeking too soon, let's go through the slides.
All right then. Well,
yeah,
I'll hand the reins over to you, and you've got some graphics to share with us. And
I do.
And I'll have a bit of a discussion about some of these key points as we go through. And of course, we will have time in the latter part of the hour for people to give us their questions, which you can transmit to us by writing into the Q&A panel, which you should see in front of you.
Yes. So can I just check, Terry, you can see the...
Yes, I can see the first there.
Great. We do encourage the question asking. It tends to form mostly, you know, what do you think of this area? What do you think of that area? So it would be nice if we had, obviously some of those I know will come, but if we had others around the Victoria markets, or if people have more concerns and questions specifically around Victoria, that would be great. So I'll just get straight on with this. I have to put this disclaimer in, we all do, I'm sure you're all familiar with this, that all the things that I'm talking about, areas, any strategies, cash flows that I'm showing, it's all very general, right? It's very generic stuff. And you always have to make sure that what we talk about is suitable for your specific circumstances. Who are we? As Terry said, we are national buyers agents. We are independent qualified property investment advisors. That's a QPIA. Buyers agents, all of our advisors are QPIAs. I think that's quite unusual, but we pride ourselves on that. We care about finding the right investments for you. We operate in multiple states. We're national. We do not pigeonhole you. We look at your situation, think about where might be right for you to invest with your budget, your cash flow needs, et cetera, et cetera. And we've been doing this for a very long time. We love what we do, as I'm sure you all know. And we are members of the Property Investment Professionals of Australia and the Real Estate Buyers Agents Association. So obviously, while we can't guarantee many things, there are some things that we can guarantee. And as Terry already alluded to in our introduction, the press will continue really to print a lot of stuff, much of it nonsense. And economists will continue to make forecasts, predictions wrong, incorrect, etc., etc. You have to always remember why they do this. They just want your attention. They're not giving you investment advice. They need to continuously be relevant. So it's rare that they're going to talk about things that are going to happen. They love to talk about things that are happening, and that is going to be what we are going to talk more about today. So governments will come and go. They're going to continue to make crazy policies, reactive policies. Being in government is a business. Remember that. They very rarely tend to try and solve actual problems. Interest rates are going to continue to go up and down, and world-shattering events will continue to happen. But properties bought in strategic locations with all those really great long-term growth drivers that we talk about, with high demand and low supply, they will grow in value. I like to summarize that the key to success in property investment lies in ignoring that noise that we are talking about out there. I can't stress how important that is. You need to have a plan. You need professional help. You need to find the right location, the right property in that location, and you need to find the location and the property to suit you and your circumstances. So those things are really, really important. So just going back to that location thing, as Terry said, and as we've both said in the introduction, really the smart money buys in locations before prices start to take off, and not buying in overheated markets like Perth. I mean, it's been fascinating watching what's been happening over there in the last couple of years. But if you want to make real money in property investment, you need to target locations that have the credentials for that long-term growth, but are currently at that lower point in the cycle, not at the peak of a cycle or approaching a peak. So I don't want to offend anyone out there, but we have to acknowledge that so many property investors out there, especially novices, they're herd animals. A lot of us like to have that social validation that a lot of that we get in the press, that tells you, that really just confirms kind of what you want to hear. I know it's really hard to trailblaze and buy in areas that not a lot of other people are talking about. It makes people nervous. I understand that. But if you don't do that, it means that you are buying in areas that are, like I said, featuring really heavily in the press and the media. And that, as we all know, has been Perth. If you buy there now, you are buying in a market where prices have already risen 15 to 20% in the past year alone, and probably even up to 50% in the past 3 years. So like I say, buying in a market like that means you are buying at or after a peak. You've missed most of that growth that's happened there. Now, and I have to stress, I'm not saying that Perth markets won't continue to experience growth in value, but you are not buying in optimal conditions and in a market that is past or approaching its peak. You should have been buying there 3 years ago. And right now, one of those locations that meets the criteria that we like is Victoria. Before we do go and look at Victoria, I do want to just very slight aside. Let's take a moment to take in this piece of information. South Australia, Terry never talked about in the press ever as an investment location.
No, and certainly it would surprise a lot of people to learn that South Australia is actually the nation's top-ranked economy. We always follow this report by ComSec, the State of the Report, which they publish quarterly, and they rank the 8 state and territories in terms of their economic outlook based on a series of metrics.
Yeah.
And because we think there's a strong correlation between the strength of an economy and the performance of the capital city property market, and also the regional market. So the fact that South Australia is the best performing economy, can help to explain why Adelaide has been such a good performer as a property market for the last few years and continues to do well.
Yeah, yeah, and it's ranked top for the first time in ComSec in this report's history. That's the other thing. And not only in economy, it ranks first in a number of those metrics: economic growth, relative unemployment, construction work, dwelling starts. So there's a number of factors that make it top in ComSec's report, and that is really important. So
Victoria also ranks very highly as well, number two.
It does. So I'm going on to that. So you can see the big number one as South Australia, but equal to are New South Wales and Victoria. Now, back before we go into more about Victoria, I do really want to urge everyone to go and get these reports if you are interested. Obviously, apart from this fabulous webinar, but if you want to know more about why some of these markets in Melbourne and Victoria as a whole are so compelling, you have to get these reports. I know I'm biased and I'm talking to Terry, but genuinely, I can't tell you how important and awesome the information in these reports is. They are second to none out there. Do yourselves a favor, just do this bit of research. Read about what you're missing. They go into a lot more detail than we have time to go through today. But really, just again, Terry, I think what you guys do is incredible, really, just in terms of independent, valuable information out there. So, Victoria, it does have one of Australia's strongest state economies, and very consistently so. So even though we've just talked about South Australia being the top right now in the most recent report, just in October, in that quarter's State of the State reports, it had the strongest of the state economies. It ranked top in that report. There are also, sorry, go on.
You mean Victoria in this case?
I do, Victoria. There are forecasts that say that gross state product in 23 and 24 in Victoria will be around 2.5%. Again, these are forecasts, of course, but that will outpace all other states and territories. Victorian economic growth is set to lead all the states over the next 5 years, say to 27, 28, at an average annual rate of 2.3%. Those are, again, very compelling figures. And like Terry said earlier on, that economic growth is a really important metric to look at. When you
can I just emphasise that on the flip side of that, the bottom ranked economies at the moment, according to the ComSec reporter, Northern Territory and Tasmania, and it's not a coincidence that the two capital city markets that haven't shown any growth recently and currently aren't showing growth are Hobart and Darwin.
Yes.
They have in the past when the economies were stronger, but right now they're not performing. There is that very strong correlation. So the information that you're giving us now about the underlying economy for Melbourne and Victoria is really important stuff.
Yes, agreed. Thank you. But it's one of the top things that we look at, in all of when we look at those fundamental growth drivers, it's economic growth. It's obviously it's right up there. So moving on, another metric, population growth in Victoria is among the highest in the country, obviously enhanced by overseas migrants, students, etc. It was probably 2 years ago that Victoria's population actually declined quite considerably by more than 50,000 people, especially during COVID. And now it is the second fastest growing state. The city of Melbourne is the fastest growing LGA in the country in terms of population growth at 10.6%. Melton, which has now been, the redrawing of boundaries and stuff, is kind of considered part of Metro Melbourne. It's on those far western outskirts of Melbourne, is the next fastest at 6.6. And then, of course, you've got some other more inner city areas. Yarra, Port Phillip is in there as well. So again, interesting, that we've got some top spots. Perth is in there as well, of course, a couple of WA precincts. I actually took out in this chart, there's, when you look at the, this is from the ABS, there's a couple of tiny sort of smaller jurisdictions with like a couple of hundred people in there. One of them, I think, was Peppermint Grove randomly in Perth. But so in terms of percentages, it was up there. But I've kept in, obviously, those more major population centres as representative, really, of what's going on in the grand scheme of things. Look, I will say that I think that certainly in inner Melbourne, we're probably coming off quite a lower base here because, you know, it was so badly affected immediately and post-COVID. So we are, I think, coming back, really, it's more of a return to normal. But nevertheless, I think those stats are compelling. And the latest ABS population data shows that Greater Melbourne grew 3% last year, which is well above the national average. And on the national list of LGAs with the largest population growth, 4 of the top 10 were Melbourne locations. And I think, Terry, we were talking earlier on, you've got some more, you saw some recent stats on that too.
Yeah, so this is, again, another analysis of this latest population data that's come out from the Australian Bureau of Statistics. And this analysis breaks it down into suburbs. And what it found is, of the top 12 suburbs for population growth last year, 9 of the 12 were in the Greater Melbourne area. Yeah. And of the top 30, 16 of them were in the Greater Melbourne area. So more than half the suburbs in the top 30 in Australia for population growth last year are in the Greater Melbourne area. So a big resurgence there for Melbourne. We've talked about how strong their economy is. Underpinning that and enhancing that is this big surge in population. And of course, overseas migrants are part of that, but they're not the only part of that.
They're not, absolutely. So we're just beginning to paint the picture of what is happening there, because it's happening now. When you look at this is the top chart there is the Melbourne metro area in terms of median sale price growth. And the bottom one are regional combined growth. Obviously, I'm not a believer that all regional markets perform the same, you know, or the whole of Melbourne doesn't perform the same. But just to give us an idea of what is happening, as you can see over the last sort of couple of years, not very much. And that is why those earlier slides, when we talk about economic growth, we talk about population growth that's happening and that is coming. This is why, partly why it's exciting, because you are coming in at a much better time, that cycle that we were talking about earlier on, than you are in Perth. And I've got some more charts that will showcase that a bit later on. So Melbourne hasn't had the price growth of some of our other cities in the past year, but we are seeing a big uplift in buyer activity recently, which is often, as Terry very eloquently puts in his reports, a precursor to elevated pricing. So many locations have recorded really strong uplift in sales volumes in recent months. We do still, like everywhere in the country, we're still seeing a sort of slightly depressed listings numbers. We're not back to where we were yet in terms of people listing their properties for sale. And the other thing that is interesting in this uplift in buyer demand is that a lot of it is coming from owner occupiers, which again is interesting when you're thinking about who those purchasers are. It's important to know that it isn't mainly investor activity, which can sometimes skew figures a little bit. So to me, so far, all of this supports forecasts that Victoria is poised for a period of notable growth in residential property prices. Moving on. Next metric of demand and supply. So a month or so ago, the ABS reported that Australia's dwelling approvals as a whole, we declined to only 162,000, which is tracking around 78,000 below the Albanese government's target to build that 1.2 million homes over 5 years, which means they actually need to be building 240,000 homes a year to get to that. Obviously, the press called it a collapse in approvals. It was led by Victoria, where only 51,000 homes were approved for construction in 2023. And that was the lowest annual approval figure for Victoria in a decade. So, and this level of approvals is also way below the specifically Victorian government's target to build 800,000 homes over a decade. So, which obviously requires 80,000 homes annually. So you can see that the supply, and this is our dwelling Victoria, this chart on the left here, the dwelling approvals in Victoria, you can see the decline. Supply is very low. You can see in almost every jurisdiction in Victoria how low building approvals were when you look at charts for building approvals, especially, and Terry's, again, those reports that Hotspotting do show you the level of building approvals. You can see how low those approvals were compared with others in recent years. But the demand is high and only increasing because we're, again, like we've just said, we're talking about population growth, which exceeds the national average. It's growing at an unprecedented rate, with the state growing by 182,000 people in 2023 alone. So Victoria is facing a worsening housing shortage, with population growth destined to way outrun dwelling construction. I do like to put these two charts kind of next to each other, the decline in dwelling approvals and the population growth on top of that. Now, added to that, another ABS chart is the one for new loan commitments for investor housing in Victoria compared with the other states. I'm hoping everyone will see my little blue arrow there. It's meant to point to the little decline there. The black line there is Victoria. The other states are mostly all at least even or going up. Victoria's is going down. So the supply of rental properties, i.e. properties bought by investors, has declined. It is still declining. So what that means is that vacancy rates are very, very low. That's our bottom chart. There are no rental properties. It puts further upward pressure on rents and yields, which is our top chart. Now, I don't see this changing anytime soon. I think, in fact, it's just going to get worse as demand increases and the supply of rental properties decreases. So, again, not only have you got a much more favourable buying conditions here because you've got less competition from other buyers and other investors. You've got all this capital growth to come and a demand for very few properties, rising rents because of a critical rental shortage among this hugely growing population. To me, this is, all these indicators point towards it being such a great time to buy in Victoria. Terry, I think.
Yeah, I mean, there's a growing volume, isn't there, of indicators that point, and the time in the cycle. But one of the ones that really impresses me, you mentioned it, that we place a lot of faith in the trends with sales volumes as a precursor to what will happen with prices. And PropTrack published recently a comparison of the first 3 months of this year, the first 3 months of last year. It did show that nationally there's been a big uplift in sales activity. So it does bode well for property markets generally in 2024. National increase of 24% in sales activity compared to the first 3 months of last year. But Melbourne was up 38%. Now, this has not yet translated into price growth to any great degree. And that is normal. There is always a time lag between an uplift in sales activity translates into an uplift in prices. That's one of the reasons, coupled with some of the other things you presented, like population data and economic performance, and the lack of supply, why we think that Melbourne and Victoria are going to have a period of growth starting this year. And now is the optimum time to be getting into that market because they're at a low ebb in the cycle.
Agreed. Yeah, of course. Absolutely. So I've got a couple of location profiles for you. I am keeping these two locations that I've kind of chosen for our webinar here at affordable level. So they're well below $1 million. Most people's borrowing capacity has come way, way down, obviously, with our rise in interest rates. So I really wanted these particular locations to be achievable for people, to be kind of relevant rather than feature somewhere that's, 1.5 or million or et cetera, et cetera. So while I do think there are some really great opportunities in Melbourne itself, I'm staying mostly to the fringes, and I've picked a regional city as well. So the first one that I want to look at is Geelong. When you get Terry's report, I think one of the things actually that struck me first of all, which I know sounds, I don't know, it's very high level, but I know Terry's reports really well. And I think what struck me, one of the first things that struck me and strikes me about the Geelong part of that report is its length. It's rare that we see. I think, Terry, in your overall report, there's about 20 pages just on Geelong. You might not know that, but it is because there's so much to talk about.
There's so much to talk about. There's
There is so much to talk about.
Big projects of an infrastructure nature, for example,
yeah,
just something that we're really interested in, because that
yes.
really elevate an economy and the property market as a.
That's right. So we look at, again, a rapidly growing economy. We've got billions in recent infrastructure expenditure and projected billions more in other major investments. We've got population and gross regional product growth. They are all above the national average. And we've got roughly forecasts of saying there's going to be about 500,000 residents expected in Geelong by 2047. Those are the forecasts. I find often it depends on the area, but in forecasts like this, or in forecasts about areas like this, I find that those forecasts are actually sometimes quite conservative, and you can see the way things are tracking, that it's going to exceed what people forecast. You've got major urban expansion plans that are going to cater to, at least at the moment, another 110,000 residents, create 35,000 jobs, et cetera, et cetera. And the other thing that we love about this area is a good, solid variety of employment industries. And as I'm sure everybody out there knows, the reason that is important is that if you've got a good diversity of industries, it's a very stable area. If one of those industries has a bit of a wobble, then there are plenty of others that people can work in. And rather than if you've got maybe one major one or two major ones, industries, especially if they're volatile industries, it can lead to wobbles all the way, filters all the way down into ultimately property pricing, which is, of course, what we're interested in here. So you've got council data that shows, again, these billions being spent on major developments across, at least, I've read, 147 projects that were either on the planning table, under construction, or that have been recently completed. Again, I urge you to have a look at Terry's report for all the details. It's like it just goes on and on and on, the exciting things happening in Geelong. And for those with those slightly lower borrowing capacities, we have at least 12 suburbs in the Geelong area with a median price under 700,000. So I think that's good. It's affordable for a lot of people. It has all those growth drivers. I've kind of slightly randomly picked a couple of suburbs here to just showcase in terms of our vacancy rates at 1%. In Corio, that's up on the north. Often gets a bit of a bad rap, Corio, but it's a lovely little place, slightly older properties, very popular, great growth. And then you can see the Bell Park, which is more sort of down, it's heading further south from Corio in towards town, with a median of around 633. And I'm sorry, but what is not to love about that growth chart? It's so consistent. It's
It's
yeah, go on, Terry, sorry.
it's actually quite rare to see a growth chart with such a consistent rise to it. There's
Yeah.
normally up and downs. The general pattern for most good locations is up, but
Mhm.
there are hiccups along the way. There's
Yeah.
very few evident in that. It's just a story of consistent growth. I think the
Yes.
question, someone, we've already got a lot of questions coming into our Q&A panel, by the way. There's a
Yes.
lot of engagement today, Kate, so get ready.
I'm getting ready. I hope they're not all from Geelong. Everybody lives in Geelong going, woo!
No, well, one of the questions is, given that level of growth, can it continue into the future? Is there capacity for further growth in these places?
Absolutely, because one thing I want to show you, which was actually, I'll be honest, news to me, Greater Geelong is Australia's third most popular destination for Australian movers. Just take that in, right? So it's in third spot. It is second, it's in third spot because the Sunshine Coast, shocker, and the Gold Coast, even more shocker, are the top two. Geelong is in third position. I'm sorry, tell me if you knew that out there. If you're living in Geelong, you probably do, because you're getting this onslaught of people moving to Geelong. But I guarantee you that there'll be a lot of people out there who did not know that, right? It's a lovely place. It is. I mean, obviously I know the place quite well. It's you've got, a really desirable lifestyle change. It like I say, it's the third most popular destination in Australia for people moving from capital cities to regional areas. You've got employment opportunities that is attracting people from across Australia. You've got that sea change trend, etc., etc. So that, I think that's another thing that just speaks for itself. That information. Now, I've done here a little bit of I've just picked a kind of a bit of a random property that it's just sold in the last couple of months in the Geelong area. It is a very nice little property. It's not too old. It's, I'd say, around a 2002 build. And I've done a sample little generic cash flow calc for us so we can see how that looks. So this suburb median is about 620. The median yield is around 3.5%, which is not fabulous, but that is a median, remember. So this particular property, I'll just talk you through it kind of quickly, sold for 619, which you can sort of see that purchase price. It would rent probably for around 520 a week. So that actually gives you an actual yield of around 4.4%. I tend to factor in a short vacancy every year. Just do that. It's a bit of a worst case scenario. But with very, very low vacancy rates, as I said, that would, it's likely to be less than that, but let's err on the side of caution. It's around a 2002, 2003 build, so you will get some depreciation on that. I've assumed a 37% marginal tax rate, 6.3% interest rate on your loan. I have factored in, you'll see the two blue arrows in those holding cost charts down here. Hope people can see that. Where I have included the land tax that we all now have to pay. I know it's outrageous, but just deal with it. And we have those minimum standards and upkeep that we have to perform on our rental properties in Victoria, which we do in other states as well. This is not a new thing. All states are bringing these things in. So I have upped our repairs and maintenance line there a little bit. And I've shown you that cash flow outcome before and after tax, but also before and after those two things. And there is literally like a $20 difference in terms of, when you look at reasons why investors are fleeing Victoria because of land tax. I understand it's a principle and it's not great, but please don't let this put you off buying in such a compelling investment area. But yeah, Terry, I don't know what else to say. Don't let it put you off. It's not a huge difference in before and after.
No, I think it is advisable to actually sit down and do some of the numbers. What does it actually mean?
Yes.
I mean, it's true that the state government of Victoria is just, I think,
Yeah,
lost
exactly.
a little bit.
Yes.
They don't seem to understand that they do have a rental shortage crisis, and
Yeah.
what they should be doing is actually encouraging people to become landlords, not the other way around.
Yeah.
Some of the headlines are a little bit scary, particularly around land tax, but when you do the numbers, the
Yeah.
impact isn't that great. And as
Correct.
someone who owns property in Victoria, I don't plan to sell mine because I've had such good growth in both rentals in values in places like Bendigo, for example, which is another regional city that we could strongly recommend for its
Yes.
future.
Absolutely. So just wanted to show you that as a bit of a case study, real life example. Now, next one. I know I've talked about it before. I love me a bit of Ballarat. It has, again, really compelling growth drivers. The Australian Bureau of Statistics names this as the fastest growing inland city. In 2020, which admittedly was 4 years ago now, Ballarat was named one of Australia's most livable regional cities, the best regional city in Australia for economic growth. And there's that phrase again, economic growth. It's really, really important. It has proximity to Melbourne. It has a wonderfully diverse economy. Gross regional product in Ballarat is up 10% on the last year. That is a lot, everyone. That's a lot. I see these figures all the time, and it's a big figure. It has a lower than average unemployment rate of just 2.6%. It has a growing population. It's got things going on like a substantial hospital expansion. It's got airport runway upgrades happening. You've got the Ballarat West Employment Zone. So there's other things. Again, get Terry's report to read in a lot more detail about what is happening there. That $5 billion regional rail link upgrade makes the commute times to and from Melbourne much, much better. It's about an hour and 15 minutes. But think about and look at who actually does come. People do commute, but when you look at, again, the Bureau of Statistics and census data, actually only about 1,500 people work in Melbourne. They list Ballarat as their residential place and their workplace as Melbourne. It's only about 1,500, just over 1,500 people. And that doesn't necessarily mean that they're all commuting to and from Melbourne every day. They could, the place of work could be Melbourne, but they are working. Obviously, the new trend of working from home means they might only be doing that 2 or 3 times a week, if that. 81% of residents live and work in Ballarat, and that's good. It's a good sort of healthy amount. Population growth between 2021 2036, so in 12 years' time, is projected to add another at least 40,000 people. I'd say that will exceed. It's one of those figures where, or one of those estimations and forecasts where you see that, that estimation is kind of, well, sort of almost there already, not quite, but, I think that will be exceeded. And the City of Ballarat economic strategy says that there is, they have an economic strategy that says there's capacity to generate 20,000 jobs over the next 20 years, which obviously they need to with that population growth. Again, just slightly randomly selected a suburb on the south side with a 0.6% vacancy rate. They are consistently low. I think over the last, looking at that, since 2005, it has barely gone over 3% in terms of vacancy rate. And that's kind of the magic percentage number that we look at. We like it to stay under 3% in terms of vacancies. Again, so that's nearly 20 years of it staying at exactly where we like. And once again, look at the growth chart. It's very sure we had a little dip last year. I tend not to look at 2024 figures because we are 3 months, really, in terms of actual settlements, only 3 months in. So again, what's not to love about those very steady growth charts? Nothing wrong with it. Ballarat, I think, very much worth considering. I have again picked a little sample property. The suburb median is 539,000. The median yield, sorry, this is just slightly, I think it's, as I say, 4.1, Terry. I can't quite read my own slide here because of the little Zoom thing that's blocking it. Our purchase, sorry, 4.1. 4.3, there we go. Okay, so our purchase price of this property, 545,000. You're probably going to get around, I'm being very conservative here, $450 a week rent. It's a 4.3% yield of this actual property. It's a slightly newer build, so I'm factored in a little bit more depreciation. All the other holding costs and details are the same. And again, showing that difference before and after your land tax that we do now have to pay, and I've increased the maintenance slightly. It's again, it's not even $20 a week difference. So it shouldn't deter you from investing in a great area. That's it. I think to me, these figures speak for themselves. Obviously, the moment interest rates go down, your cash flow is going to improve. Massive shortage of rental properties. People may have noticed I have picked 2 3-bedroom properties to showcase. This could be a whole other webinar, but Australia's family size is shrinking, or household size is shrinking. Again, there's national studies about this. Not everybody wants that big 4-bedroom house. 3-bedders are in massive demand. And I think that the yield growth on 3-bedroom properties is going to way outpace yield growth on 4-bedroom properties moving forward over the next few years, just because of that shrinking household size. How are we doing? Hurry up, Kate. So here's a little summary of growth charts from typical suburbs in each state. Again, I'm not really looking at the 2024 figures. We're barely into the year. It shows our boom and flatline mini declines cycle of WA. And again, to me, why would you buy there at this time? Now, of course, these past charts are no indicators of future performance. I'm not saying that some Perth markets won't continue to grow in value. But I really do think that you have to ask yourself what the likelihood is of this continued level of performance. Yes, building approval levels are also really low in the Perth area. Population growth is relatively high. It's popular. It's a great place to live if you want to be over that side of the affair. But think about where the smart money goes. Is it really the optimal time to buy an investment property in Perth? Is it worth the risk? That's really the question I would put out there. And think about what some of the reasons are that investors are and have been buying there. It's price point, it's yield. I can't dispute the fact the cash flow is awesome. And the fact that it's all over the press, it gives people confidence. But the more the prices rise in Perth, the more it's going to become and be in line with some of these other markets. And Perth will become less and less attractive and affordable. Yields are growing everywhere with our critical shortage of rental properties. And I think that's almost probably going to reach, dare I say, catastrophic levels in Victoria because of the lack of investor interest. You know, the government's doing everything it can to put people off buying rental properties there. The construction shortfall, but people do still want to rent. They need and want to rent properties. And when you look at the Victoria growth charts, as opposed to, let me just go back, the Perth ones, look at the difference. Boom, flatline, decline, boom, versus that. You know, Geelong, as we've said, it's the 3rd most popular place for people to move to. Where are all these people going to live? That's kind of the question I would put out there. The same is true in Perth. Don't get me wrong. Like I said, building approvals down there are also over there are very low. Population growth is high. But is this sustainable? That's the question I would put out there. There we go. How am I doing? 1,000 questions, Terry. I've got a bit of a call to action just to things off before we go to questions.
Why don't you just speak to that and just leave it on the
I'll
screen
leave it up there. I'll leave it up there. Yes.
while we deal with
Yeah.
with questions. There was one that came in from Jason a couple of days ago, and he's also included in the Q&A panel today. And I did a little bit of I did a few numbers in response to what Jason was saying. He's suggesting that Ballarat and Geelong have an oversupply of property for sale at the moment with new housing estates. Do you expect we'll see things improving again anytime soon for existing investors in these markets? How long do we have to wait? With the amount of land release, do we expect that to have an impact on values in Ballarat? So I did some numbers on that. I actually don't see in all the numbers that I've got any evidence of any kind of oversupply. I would say there is a good supply of properties for sale in places like Ballarat and Geelong. That's one of the reasons why it's a good time to buy there. As opposed to some other markets in Australia, we have referenced Perth as an example of that. It's very hard to find property available for sale. Anything that does come up sells very quickly. And it's very difficult to buy sensibly in those markets. Whereas in Geelong and Ballarat, they're at the another point in the cycle. It's not as frenzied, and that's one of the reasons why I think it's a good time to consider there, looking at the track record and the prospects for future growth. Days on market in both Ballarat and Geelong for the individual suburbs mean that they're what you might call normal markets. So you're not having to buy recklessly to secure a property in these markets.
Right.
But the vacancy rate figures don't suggest oversupply. Ballarat, all the postcodes in Ballarat have vacancy rates no higher than 1.2%, and many of them are below 1%. The building approval figures in both cities peaked in financial year 2021 and have been falling quite significantly since then. So the amount of new supply coming in to these cities is actually much lower than has been the case in previous. So
yeah, and Jason will have hopefully, if he's watching, will have seen, you know, everything that I've talked about, and the reason that this is exactly why, you know, I certainly wouldn't recommend that we buy right in the middle of one of those new housing estates necessarily. But that some of those stats that I've gone through show that this is exactly why now is a good time to buy. Why would you wait until there is that frenzied activity? Now is the time to get in there while you're not overpaying for your rent, for your investment property.
Keeping in mind that all that background information we've given today about economy, about population, about an uplift in sales activity, all of that's an underpinning of future price growth, and the point of the cycle means it's an attractive place to buy, rather than wait till you read in the media that there's a boom happening in Melbourne, and then most people want to pile in and follow the herd, but they will have missed
exactly. Wish I'd have listened to Kate back in April 2024.
Yeah. So just referring to some of the specific questions, some of these are quite specific. Anthony is asking, would you sell a St Kilda unit and use the sale process to buy a house in a Melbourne suburb?
Hard to say. Don't know the circumstances of the person asking the question. I will say St Kilda units are, look, they perform okay, but it's just you've got a very transient population there. Obviously very popular with tourists, and as I say, that more transient population. It's less a place for your family, bringing up, you know, kids, going to school. Lovely area. I know St Kilda very well. Would I do it? Depends how much you paid for it when you bought it, where it is. I mean, there's so many factors to consider there. Possibly, yes.
Yeah. I mean, if I owned a unit in St Kilda, I wouldn't sell it to buy a property elsewhere in Melbourne. One of the reasons for that is that what we are seeing as a national phenomenon, but it's certainly very evident in Melbourne, is there is stronger and stronger buyer demand for apartments in good
Kate, I think we've lost Terry for a bit there, so I might jump in and help out.
That's all
How are
right.
you? And hello to everybody else
Sorry.
as well. You've caught me in my gym wear at the moment, but we'll kick on with some more questions, Kate. So I've got one here from Thomas that says, you're a national buyer's agent. From an optimal portfolio perspective, would you bet your money on Tea Tree Gully, South Australia, with stronger yields or Melbourne units in and around the CBD? A lot of older units are really not that appealing from a living perspective, and wonder whether or not it could be lifted up along with other unit prices in the area.
That's a tough one, actually. That's a great question. I think there's compelling reasons for both. I love that Tea Tree Gully area, the Adelaide, great performing market. It's I'd say probably a much more, historically would have been a much more stable market. But with like I've said, that shrinking household size, and Tim, you'd know all about this too. Obviously, you've worked in this market a lot. That apartment market, I think, is becoming more and more appealing for so many different reasons.
Yeah.
And I'm sorry to sound vague and generalizing here, but you pick a great unit, not in one of, not one of 500.
Yeah, avoid the high density.
Exactly. So watch your density, pick a great location with good access to amenities. I think a good, and the right cash flow in terms of your strata fees and whatnot. I think a really strategic unit purchase could also work really well, as long as you're just not right, in one of those enormous towers.
Like, I think each individual investment's got to be looked at on its own merits. Avoid the high density, look at your body corporates, and go from there.
Exactly. But great question. Really, hard to pick. And it depends on your risk profile, in terms of
exactly.
Taking a bit of a punt there, but all the signs point towards that unit market really performing quite well over the next few years. Yes.
Terrific. I hope that helps, Thomas. Next question we've got is from Ganath. I hope I've said that correctly. Is VIC still good for investors? Looking at land taxes, obviously we've touched on that a little bit today. They've increased considerably. What do you get to say? We've sort of touched on a little bit of that already, Kate.
Well, it's kind of been the point of the whole webinar. Yes, Victoria is good.
Yeah, obviously good, but also, it's a pay to play mentality, isn't it? Like anywhere, look, we just talked about South Australia. South Australia's, stamp duty and title transfer is very high as well. It's something that in every market, it's got their own intricacies.
Exactly. But really, you need to look at long-term capital growth prospects. That's where the real money is, not the 2,000 extra you're going to have to pay in fees right now. Look, you need to play a long-term game here. Yeah.
Robert's got a good question. What are the reasons why dwelling approvals and investor loan approvals are so low in Melbourne compared to other states?
I don't think they are particularly, they are low in Melbourne, but they're low everywhere. There's a number of reasons. I think that comes through, really, we're still in that coming out of the supply chain issues post-COVID. There just haven't been the materials. We've had labor shortages, costs. It's this got big, what's the word I'm looking for? Like big concert of factors that have come together. Yeah,
and then you add population growth to that.
Yeah. But they've been more expensive to build, harder to build. And then you probably will also factor in legislative issues in trying to push approvals through. So, we've got this the government's, like I say, they put forward these grand plans of, we're going to build all these millions of properties because they have to be seen to be reacting. But the reality of it is actually quite different. So, but yeah, number of factors that go towards building shortages.
Okay, a couple more. I got one here from Franco. Hola, Franco. I know Franco. There are some studios and one-bedroom apartments in Melbourne CBD listed for less than 300,000 with high rental yields. Is it a risky purchase considering that new residential developments are in construction at the moment and that they could lead to an oversupply?
Yes, I think they are risky. Banks don't like them.
Hard to finance.
Very hard to finance. Moving forward, I think that is risky. You are, despite the fact of what I'm saying about household sizes shrinking, I would be very cautious with that sort of purchase. People do still like a second bedroom. So, and in terms of if the banks think it's risky, that's there for a reason. Yeah.
Look, I think this is a really good example of why, some properties work for some people and others not for other
Yes.
people. And, if you're at the end of your working career and you're just after cash and you're buying a unit like that just for cash flow, makes sense, but don't expect huge growth opportunities from it. And, overheads, lending, very tough.
Yes.
Well, Terry's back.
Terry's back.
Apologies for my absence. Telstra chose this moment to
Of course they did.
to lose our internet connection for 5 minutes.
All
Don't know.
good.
I imagine you'll be managing quite well without me.
Oh,
We just assume you wanted to avoid the tough questions, Terry.
that's right.
Well, I just wanted to leave them all to cut because some of them did look a bit curly. But I gather that you've actually got through all of that. And
Well, we've got fewer through, but look, there are a lot there. And just I suppose a reminder for the audience, we will be sharing these questions with Kate, and we won't get through them all. But if you do have questions, feel free to drop them in there. And I'm sure that Kate will reach out because she'll have the contact details from everybody who's attended today. So feel free to jot any more questions you've got. But Terry, we've probably got a bit of time for a couple more. I might jump off and leave you to it.
Okay. Let's see. Chandresh, could you please name 5 spots worth considering? I guess he's asking hotspots in Melbourne and regional Victoria.
How much money have we got to spend?
Yes, that's right. The answer, we get a lot of questions at these events and elsewhere. Where's the best place to buy? And the answer depends on the individual. I often say to people, you can have 12 people in front of you. They all ask that question. There'll be 12 different answers.
Sorry.
Circumstances.
No, and I don't mean it to be evasive, but and again, it's just going to be so different for everyone. But that it's really true, right? Depends what if you've already got property in Victoria, how much have you got to spend? What's your cash flow needs, etc., etc. Age of property.
Yeah, it does depend on a lot of those things. Chandris has just written in that his price range is 600 to 700,000. Certainly, the 2 locations you've highlighted.
Exactly.
Ballarat,
yeah. And I would also say, for your top 5 picks, read Terry's report. They're there. It's right there. No, that's it. All the information that you need. The research is second to none. The locations are in those reports and why, with medians, price, all of that. I've just picked 2 of them.
All right. Another question that some people are concerned about low rental percentages. Should that be in the interest of chasing capital growth?
Yes, that is a factor. I agree. And Victoria is the purpose of the webinar is to showcase Victoria as worthy of consideration. The rental yields are lower in Victoria than they are in Queensland. And I'm not saying buy in Victoria over Queensland or over South Australia. The webinar is, why would Melbourne and Victoria be better than Perth and WA? So there are other better cash flow outcome options than some of the Victoria markets that we have showcased today. Absolutely. If that is a concern, then have a look elsewhere.
Yeah. Okay. And I really don't know what questions were answered while I was in that cold caused by the collapse of the
Telstra
internet.
Yeah.
We have come up to the end of the hour, so it might be a good time to wrap this up. Look, this has been a great webinar. It's been a really interesting topic, certainly a contentious one. I think you've presented great information today, Kate. A compelling case for why not only is Melbourne and Victoria a good place to consider, but why now is the time to be considering it.
Yes.
And I certainly do agree. And I am also, like you, concerned about the way people are piling into the Perth market at the peak of that market. And maybe because of the frenzied nature, buying perhaps anything they can get their hands on at any price without doing proper due diligence. And I think
I'm seeing it happen.
The time to display some caution and do real due. And if you can't buy safely with due diligence, don't buy, I would suggest.
My goodness, I know. I promise you're leaving it all to luck, and that is not a way to invest $700,000.
So So thanks, Kate, for a great presentation.
Oh, my pleasure.
And for something about you and this topic has attracted our best audience, both
Woo.
registrations and people who tuned in live today than we've had for more than a year, maybe longer. I'd urge everyone to follow up, make contact with Kate Hill at Advisable. There is that special offer for those who do follow up. It costs nothing to make the phone call or send the email to make further inquiries and see whether Advisable can help you with your property investment needs. So Kate, thank you. Thank to everyone who participated. Those who didn't get your questions answered today, please follow up with either myself or
There's a lot.
Kate, and we will do our best to give you answers. And Kate, let's do it again soon.
Can't wait.
Okay, and just before we go, a little poll we do at the end of each of these 100% of people who tuned in today found the webinar informative. No one said it wasn't what they were expecting, and the vast majority said it was very informative. So that's great feedback. Thank you, everyone, and thank you again, Kate Hill. You did a great job. Looking forward to doing the next one.
Thank you, everyone.
In a few months' time. Okay,
Talk
bye.
soon. Bye, everyone.